I'm very overweight Solana because I could see it survive the worst nuclear winter. I think as assets mature, they become less volatile. But we'll also be feeding capital into crypto land, and crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. Some of these will do 50x in a month. Always the most ridiculous thing happens in crypto. Basically, it's the overhang from GBTC. So there's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand. Okay, so that takes time for the market to digest. And then you got to think through who the RAAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and saying, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. It's going to take a while longer, but it's there now. I just think of the ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. Always the most ridiculous thing happens in crypto. I mean, even the run up was the best, right? But I do think of it as an economy, and this just allows trade. So if you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month. And they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. The boomer crowd who'll be more concerned about the volatility, I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's a buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors, putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land, and crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right. And also, everybody's got PTSD because of last time, right? That second run up after the big correction, the second run up, everybody thought it was going to extend further and it didn't. And so everyone's got PTSD. So how I'm thinking about it, I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. But we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. Everybody wants price targets, and then a year and a half's time they hate you for it because you weren't exactly right. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything everywhere all at once cycle, when people have different unlocks for NFTs or inscriptions, or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well. Bitcoin's now become financialized when it wasn't really. It was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are kind of defined risk products, but what you end up with is, in a very high volatility product, we get a lot of volatility sellers, and it dampens the market because they're always hedging, and that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself. So I do think that's a bigger deal than people expect. But the casino for options on ETFs is going to be quite amusing for a while as well. We've all made the mistakes, and everybody makes mistakes. It's very hard dealing with an asset, let's say crypto, that is very volatile, but when it runs, it really runs. And you become overwhelmed by emotion. You want to look for 100x's as opposed to just own some Bitcoin. And if you want to own some ETH and a few of the big projects, and just buy and hold. But people don't do it. They want to start trading it because they think they can make more money. Also, they custody things wrong. People start thinking, I want the extra 5% yield by sticking into some project of which they know nothing about the security of. And the don't fuck this up is, don't let somebody take your tokens. Don't trade, and hold quality assets. If you can do that with 90% of your portfolio, you will do well. Keep 10% to be a total filthy degen. Do what the hell you want, because that will go to zero. We've all got the wallet of shame, right? Every single one of us has a wallet of shame of shrapnel left from the previous cycle that didn't do anything. So don't fuck it up is trying to protect people from themselves. And so we've actually even issued an NFT, which is free. So it's in your wallet, and it's a video of me saying, don't fuck this up. So when people go in their wallets, there's me looking at them disapprovingly, trying to say, look, don't fuck this up. It's free, but it's the most valuable NFT you'll have because it'll stop you doing the stupid shit that you'll do when you lose your mind. Here is the chance to increase your probability of your future self living up to that image you've got, which is people want a comfortable retirement. They want their kids to go through school. They want a house to live in. They want to be able to pay their medical bills. Well, if you just don't fuck this up, you can do that. Bitcoin itself is so disruptive and so broad-based that it needs multi-messaging. It can't just be it's digital gold. It can't just be, this is a new system. It has to be a number of different narratives. And actually, I know there's a big philosophical hand-wringing about an ETF and is this really what we signed up for? I just think of it as the trade deal. We're bringing capital into the space to finance new projects. And that allows us to move the whole thing forwards. And when you hear Larry Fink talking about the tokenization of all assets, you know it's moving forwards. And the more capital that comes into the space, the more people can build. So yes, it's suboptimal, but we need that capital from fiat world and get it into crypto land so we can create this new system we all want. I'm very overweight Solana because I could see it survive the worst nuclear winter, and the developers were very active. The community was very active. And then they made some big tech breakthroughs with being able to mint 1 million NFTs for $100. And then Fire Dancer, which kind of changes the entire game again in terms of speed and cost. So I think so that, that's why I've backed that horse, and still having Bitcoin and still having Ethereum. And then there's a bunch of new stuff, how to Sui and Say and Polygon, and there's just so many things. And the answer is I don't know. It's difficult. That's one of the reasons I set up the asset management business I've got, Exponential Age Asset Management, was because this bit is difficult. It's easy to own the top 3 or 4 and not fuck it up. It's very difficult to choose the winners unless you're in it all day, understanding everything. And so the idea I had was to start an asset management business that just invests in crypto hedge funds. So it's a fund of funds. So they actually are doing the work to find that, because otherwise it's actually really difficult to do. Again, we've all got proof in our wallets that we thought we were onto the next big thing, and it wasn't. But in terms of, is it a winner takes all? I just think we can't tell. You can make a lot of money. And in my 10% DGen portfolio, I've got a couple of those that are just memes that I think could work, but it actually takes a lot of work. So a few of my friends are really good at doing this. They really focus on the meme. I try and look at the meme that might run for a year or a year and a half, as opposed to the meme, because some of these will do 50x in a month and then disappear. So it's hard, and I don't like people to do it unless they really know what they're doing, or if do it with the 10%, because that's one way of fucking it up. You just think you're on to the next 100x, you put all your cash in, you get rug pulled or whatever, and before you know it, you've lost all your money.